Hi, welcome to a video on an important topic, bank reconciliations. This is a very important skill, is likely one that you will be supervising rather than carrying out very early in your career, but you certainly have to understand them, and it's also a nice skill for your personal life. So bank reconciliations are an important tool for internal control over cash. They'll always be part of a well-functioning internal control system. The bank account provides a separate and independent record of cash. The bank reconciliation compares the bank balance with the company's cash account. Now, there are timing differences here, and you'll see those examples of those when we do a case. The company cash account reflects all transactions to the moment. The bank account balances as of the cutoff date for the bank statement. That's no big deal. We'll teach you how to reconcile those. Now, we need to record an adjusting journal entry for any information that is discerned during the bank reconciliation process that the bank knew about and the company general ledger, the company did not. Examples of these will be bank service charges and checks received by the bank that maybe the company was not aware of. So here's the steps in completing a bank reconciliation. 1. Start with the bank balance from the bank per the statement. Adjust that balance for anything the company general ledger knows about that the bank statement does not yet. These will include outstanding checks, outstanding deposits, and other items that the bank will learn of most of these in upcoming days. And of course, we need to call if there's an error in the statement. Then we go to the general ledger account, cash account balance related to that bank account. And we adjust it for all items the bank knows that the GL account does not yet know. These will include bank service charges, NSF checks, not sufficient funds. That means that we already deposited the check, but it turns out that when it was sent back to the sender's bank, the sender didn't have the cash to write the check. Interest earned on the bank account, the company's just learning about it when it gets the bank statement. Interest deducted from the account for a note with the bank, if that's applicable in that instance, and principal deducted from the account for the note with the bank, if one exists. Step 3 then is we will record adjusting journal entries for cash paid or received that the bank knows about, but the GL does not yet know about. Again, examples include service charges, not sufficient funds checks, interest, and others. And similarly, we're going to call the bank if any errors are noted during the process. It happens not hugely frequently. Banks are really good, but there are errors that'll come up from time to time. Okay, so here's a look at the process in tabular form, but without any numbers, and then we'll work a case. The balance per the bank from the bank statement, plus outstanding deposits, minus outstanding checks, plus or minus all other items noted from the GL that the bank does not yet know about. That's the adjusted bank balance. The bank balance adjusted for that which it does not know yet about. And then we go to the balance per the GL, a cash account at this point in time, or a checkbook. And we add in collections made by the bank. We take out service charges, and then we add in or take out anything else that the bank knows about that the checkbook or the company cash account doesn't yet know about. The net of these is the adjusted cash per the GL account balance, and that's what we are then comparing and reconciling. Hopefully these will match up after the reconciliation standpoint. To this day, I've done this every month with my bank statement since I started a checking account in the early 1980s. And we record adjusting journal entries for items learned from the bank statement that are not yet in the GL cash account. All right, let's look at a case. And I've written some notes already on here. McCartney Group maintains a checking account at the First National Bank of New York. The bank provides a bank statement along with canceled checks on the last day of each month. The October 2024 bank statement included the following information. So without looking at that, that's what the bank statement always looks like. You have the balance as of the beginning of the month. You have the total deposits that the company made up until October 31. You have the checks processed by the bank, disbursements during the month, and then bank service charges that are charged to the company, a not sufficient funds check received, where that is taken out of the cash balance because it was in that $359,000, but it turned out to be a not sufficient funds check. And a monthly payment on the note. Oh, and by the way, that payment on the note includes $640 in interest expense. So the bank balance is $76,036 at the end of the month. The outflows are because the deposits were a bit short of the checks processed, and then a few other items. So there's the balance per bank, $76,036. And I wrote some notes over here. I wrote kind of the bank knows, the GL, and the GL knows. So that thing, tilde, is that they know partially. So the bank knows most of the deposits. The GL knows them all. The checks processed, the bank knows most of them. The GL knows them all. Bank service charges, the bank knows those. The GL does not yet. Not sufficient funds check received. The bank knows. The GL thinks that we have that cash. And then the monthly payment on the note. The bank knows, the GL does not yet know. It's just learning about that because it's automatically deducted. It would certainly know if it were a check we're writing on a loan, not at the bank, not with the bank. They obviously, this is more a business thing where the bank will put the bank loan of the business in the account and do it automatically. In your personal life, any loans you have you'll have a check written as well, or an automatic withdrawal. Okay, and then we learned that the balance per the GL, by how we know this is we looked into the general ledger balance, the general ledger account associated with this bank account, and the balance was $77,836. So our task is to reconcile that $1,800 difference. Here's a little information that we discern. The company's general ledger cash balance had a balance of $77,836, hence I wrote that up there, at the end of October. The accounting manager has compared the account records to the bank statement, and by the way, this could be today, if we're not doing it on right at the end of the month. That's the current, so consider that the current cash balance. The accounting manager has compared the account records to the bank statements to determine and note the account, which deposits have been recorded by the bank and which checks have cleared the bank. Company writes a lot of checks. Deposits outstanding totaled $12,600. That means that we've made the deposit, but we made it after December 31, 2024. outstanding checks. There, we've written checks totaling $16,840, but they haven't been presented to the bank yet for payment by the party that we wrote the check to. In addition, we have a few small items. A $4,000 deposit from a customer was recorded as a $400 debit to cash and credit to accounts receivable in the GL. So here the bank has this right, and we have to adjust our GL. On the flip side, a check correctly recorded by the company as a $60 disbursement was incorrectly processed by the bank as a $600 disbursement. The GL has this right, and we need to call the bank on that. So the requirement is to prepare a bank reconciliation, and then from that, prepare any necessary adjusting journal entries to adjust the general ledger cash account. And that's our assignment. Why don't you go ahead and pause the video now and give that a shot. And welcome back. Hopefully you found that to be fairly easy, fairly straightforward. If you did, you've got a nice skill for life, an important skill for life. And of course, you can set this up in your report form any way you like. What you're about to see is my report form. If something else makes sense to you, by all means. If it worked, that's just fine. Okay, so we have the balance per bank of $76,036. And now I'm going to adjust that bank balance for anything that the bank doesn't yet know about that has occurred since its cutoff date of October 31, 2024. And one of those is the outstanding deposits. We have made deposits into the bank that occurred November 1, November 2, on a daily basis, totaling $12,600. But we also know, because we took all the checks that have cleared the bank and we checked them off, and we know in our cash account or in our checkbook which ones that we know we have written, but they have not cleared the bank yet as a result of the party we wrote the check to, cashing it. So that we have to take out of the balance per bank at October 31 to get to the adjusted balance, because the bank just doesn't know these are out there yet. And then plus or minus anything else. Well, the one thing we had was that bank error where the actual deposit was $600. The actual check was $60, but the bank treated it as a $600 disbursement. In other words, the bank recorded it as it was a $60 check, but the bank said we wrote a check for $600. So the adjusted per bank, the adjusted balance is the balance per the bank plus or minus these items. And the adjusted per bank is $72,336. Hopefully we'll find that to be the adjusted balance per the general ledger account. And let's focus over here for a second. The balance per the GL cash account. Well, I looked in the account and it currently that's the current balance, regardless of the date. That's the important thing, is that's the current balance on whatever day we're doing this reconciliation. Now, I read on the bank statement that there was a $60 bank charge. Well, the GL account doesn't know about that. We haven't recorded that yet. So we have to take that out of the GL balance if we're going to reconcile to the bank balance. Similarly, we think we deposited $2,400 in a check from a customer, but the check bounced. Well, we didn't know that. So we have to take that out of our cash account to get to the bank account. And then there's also the monthly payment on the note of $66.40. And remember, that includes $640 of interest. But plus $3,600, because we were really happy to learn from the bank statement that a deposit for $4,000, we actually put in the general ledger for $400. So we get to add $3,600 to get that right, and then reconcile with the bank that had it right. And when you net that, voila, indeed, we do reconcile. And we can indicate that the internal control is sound, and the cash account reconciles with the independent bank account. And that's the posting of the GL. Now, there's a couple of things we need to do now. Of course, we need to make this call. The bank, we need to make that call to say, hey, we cashed a check for $60, and you recorded it as $600, even though you only paid out $60. They have to put that back. And then the required journal entries. So here's the required journal entries. Well, we need to do a journal entry for everything the bank knows about that the GL does not. One thing is the bank service charge of $60. We have to take that out of the cash account. We have to reinstate the accounts receivable and take out the cash for the not sufficient funds check received from the customer, and call the customer. We have the $6,640 disbursement that we learned from the bank statement, which is reduces the note payable and also increases the expense. And that's, of course, an asset reduction. We just learned about that on the bank statement, so the general ledger didn't know yet, but it does now by virtue of this adjusting journal entry. And then we also have that cool one where we recorded a deposit for $400, but it was actually $4,000. Easy mistake to make. This is how we find out. This is why we do a reconciliation. The bank was right, but the ledger was wrong by $3,600. Okay, and after you post those adjusting journal entries, that's what the cash account looks like. And indeed, it now agrees with the balance per bank. And that's a bank reconciliation. Again, this is truly like riding a bike. Do bank reconciliations often, and they become very common sense. So I recommend that you rework this case, and you'll start to get a flavor for how this is done, and then reconcile, work the homework problems, but also reconcile your own checking account every month. All right, thank you for your attention. Have a great day.